Hello guys, welcome back to Hari Academy CACS CMA. Yes, you may be surprised. Yes, we are come up with the 100 MCQ series for cost accounting, paper number 8. I have never committed to do cost accounting, but huge response and the request from the student side, as it is a very crucial paper in group 1. We are going to do that MCQ series. Here we have personally curated the 200 MCQs for last 10 years, question papers, MTPs, past question papers, revision test papers, model question papers of new syllabus, new suggested answers, everything incorporated, and we have personally curated that 200 MCQ, the tailor-made MCQ. I want each and everyone to watch this 200 MCQ till that last, because here I have discussed so many important points. From question we derived a second question, third order question, from that option we derived it. So make sure you are watching the classes, this video till end. Make sure you secure 30 out of 30. Here I will commit 30 out of 30 will be there, because here we have covered almost everything from that part, and we give some tips over that MCQ how you need to do. Here how I planned was, due to some time constraint, we are going to record it in 4 parts and merge it and send it to you as 200 MCQs, 50 MCQs we are going to record. You will get it as a one video. I will try to make sure as much as simpler explanations is required, and I will try to complete within 1 hour or 1 hour 20 minutes, so that you don't need to spend 3 to 4 hours of time. Okay, then this cost accounting MCQ is going to be presented by me, that is Sudarshan, and for my CMA intermediate students. For those who need this MCQ PDF, you can message us with your name, place, and your email ID. This 3 is most important for us. Okay, you can message, WhatsApp us. Next, we'll quickly start with 100 MCQ series of paper number 8 cost accounting for the CMA intermediate. Our first question number 1. Which standards deals with the principles and methods for determining the depreciation and amortization cost? Just think it of it. It is cost 16. Cost 16 is the cost accounting standard 16 is the depreciation and amortization cost. From this MCQ, you will get one question. So make sure you are having cost 24. Total 24 cost plus guidance note 9 is there. So avoid this guidance note. 24 cost list you should remember. All the headings you should remember. Dash is in anything which is separate or cost of measurement. Cost of separate cost measurement is required only for the cost object. Okay. Next, direct expense. Dash includes imputed cost. Shall not includes imputed cost as per cost accounting standard 4. Fixed costs are treated as period cost. Why fixed costs are treated as period cost? Because rent will be expired in the year itself. Okay. Salary we are going to pay for that particular year, so it will be expired during the period itself. So the period cost, we can say it is in the particular year itself, so it is a fixed cost. So I will give you one more thing: variable cost or product cost. Variable cost or product cost. Make sure. Sales budget is a functional budget. Production budget is a functional budget. Okay, and one more thing, here I have marked it nothing. Okay, so you should listen this video till the end to make sure you in some of the answers we may commit it wrong. At the time of solving the problem, we may correct it. Don't rely completely on this MCQ by studying self-study. Just accompany with this video so that it will have a good conceptual knowledge for you. Then question number 6. Which one of the following situations an abnormal gain processes occurs? We'll read that option first. When normal loss is equal to actual loss, normal loss, let's say, is equal to natural loss. No, it is not an abnormal gain. When an actual output is greater than the planned output, no. When an actual loss is more than expected losses, no. When actual loss is less than that expected loss, what has happened? I'm expected losses 200 units. But actually happens is, actual is 50 units or 150 units. Then remaining 50 units is going to be your abnormal gain. Next, question number 7. Absorption means, what is meant by an absorption? Absorption is nothing but a charging of overheads to cost units. That's a keyword. Cost units is a keyword. Next, primary packing cost is a part of production cost. Secondary packing cost is a part of what? That cost of sales part. Okay. Equivalent production of 1000 units of 60% complete in respect of, very simple, 1000 units into 60% gives you 600 units. So answer is 600 units. When costing loss is 5600, you are having a costing loss of 5600 loss you are having, and administration overhead of under absorbed, you are having an under absorbed. They are asking the loss as per financial accounts. From cost accounts we are going for an financial accounts, so it is an administration overhead as have been under absorbed, so you will add back and it will become a financial loss of 6200 is your financial loss. Then question number 1, easier one. Compute the PV ratio. Contribution is given, sales is given. What is the formula? Contribution by sales into 100. Repeat it with me. Contribution into sales into 100. That is nothing but 3 lakh divided by 5. 15 lakh into 100. If you cancel, it will become 1 by 5. If you cancel, it will become 20%. So answer B is your option. What is the labor rate variance if the standard has for 100 units of an output was or 400 and rupees 2 per hour, the actual loss was 380 at 2.25 per hour. Don't, 100 units is not important here. Labor hours rate variance is there. So what you will do? 2 minus 2.5, that is nothing but standard rate minus actual rate into actual loss. What is the value over here? It is nothing but 2.25. It is nothing but 0.25 into 380 will give you 95. Okay, will give you the value of 95. Next, the standard cost of material given in a quantity of an output was 15,000. Fine. The actual cost of material used was 16,200. The material cost variance, the difference between them is 1,200 adverse. Option A. Then question number 14. Job costing is used in the furniture is also process of job costing, repairs and shoes, printing press. What a printing press will do? They will get a job. Once the job is done, they will get a payment and they will hand it over that particular output of that product. So it is nothing but all of the above. 15. Under Taylor differential piece rate system, if the workers fails to complete the task within a standard time, then he has paid with 125% of the piece work rate. Next, question number 16. Dash deals with the principles of determining production or operation overheads. It is nothing but cost 3. Cost accounting standard 3. Time and motion study is conducted by the engineering department. Okay, it is not conducted by the timekeeping department. Time and motion study is to be conducted by the engineering department. Question number 18. Royalty paid on sales 89,000. Software development charges related to product was 22,000. Calculate direct expense. That is the sum of the list they have given in cost accounting standard 4. Or basically, what is the direct expense? They will give 6 to 7 lists, out of which royalty paid on sales is also a direct expense, and the software development charges related to that product is 22. That is also a direct expense. So it will become 89 plus 22. It will become 111. So it is 111 lakhs. Then 19th one, interesting one. Marginal costing technique which follows which of the following basis of classification? Always the marginal costing will go for the classification based on the behavior. What is the behavior? The cost behavior can be of fixed cost, can be of variable cost, can be of semi-variable cost. So these are the 3 costs. So always the marginal costing will be based on that behavior, and find out what is on element wise, functional wise and identifiable wise. Maximum focus on this element and functional part and try to classify the subparts of that elements classification and functional classification. You may get the question on it. If an organization has all the resources it needs for production, then principal budget factor is mostly likely to be that we will basically demand, or we will create a budget based on the sales demand. 21. In a process, conversion cost means a conversion cost is nothing but from a direct material to a FG, whatever in between, from direct material to FG, whatever the in between process is known as conversion cost. So what and all included? Direct labor, direct expense, indirect material, indirect labor, indirect expense. Why should not be A is not my answer? Because they are having direct material, so it is not my answer. Prime cost inclusive of what? Direct material, so it is not my answer. All costs up to the product reaching the consumer, no. Less direct material cost, no. Because you need to write the correct answer is direct material is there. Product reaching the consumer will include selling and distribution overheads. Here the FG is still the point of cost of production. Okay. Next, if the sales are 1,50,000, the variable cost is 50,000. What is a PV ratio? Very simple. Sales marginal cost statement you need to put. Sales is 1,50,000. Variable cost is 50,000. If you subtract 1 lakh became your cost of contribution. What is the PV ratio formula? Contribution upon sales into 100. So it is nothing but 1 lakh divided by 1,50,000 into 100. It will become you 66.66%. Then selling and distribution overhead are absorbed on the basis of any of the above. Next, 24. In the process of 8,000 units are introduced during 22-23, 5% of inputs is a normal loss. So from 800 units, 5% is a normal loss. If it is a 5%, 800, it will become 40. If you subtract 40, it will become 760. Closing work in progress is 60% complete of 100 units. 60% complete of 100 units. So it will become 60. So 660 units are transferred to the next process. Equivalent. What is the equivalent production they are asking? Very simple. What you can do, from 660 units, add that 60, you will become 720 units. Don't focus on much on that part. This 60% WAP is 100 units, right? So 160% into 100 will become 60 units. From that 660 is the completed units transferred. So it will be 660 plus 60. It will become 720. Next, a hotel having 100 rooms, of which 80% are normally occupied in summer and 25% in winter. Period of summer and winter be taken 6 months each and normal days in a month assumed to be 30. Question number 25, they have given value. So what we are going to do, 100 rooms is there. From 100 rooms, we'll calculate 80%. Into the summer, they have given 25% in some winter they have given. This is for summer. Same 100 rooms. The period of summer and winter was 6 months into 6 months. And the normal days of room to be assumed 30 days. Calculate very simple. 80 into 6 into 30 will become 14,400. Then 100 into 25 will become 25 into 6 into 30. 25 into 6 into 30 will give you 4,500. If you add, it will become 18,900. Option B is your answer. As an integral accounts eliminate the necessity of operating in integral accounting system, we will not prepare cost ledger control account. We will only use this cost ledger control account in non-integral accounting system. Batch costing is suitable for pharma industry, because in pharma industry only we will produce them in batches. Batch 1 we will find it in our tablet or whatever the capsules we will take. In that they will write in a batch code AB0125J, like that they will do, and they will write a expiry date. So it is a pharma industry. Then in which of the following incentive plan of payment wages on time basis are not guaranteed? That's a point. Or not guaranteed. It is not guaranteed under Taylor differential piece rate system. In piece rate system, there is no incentive plan of payment on the basis of the time basis. During a period, 13,600 laborers were worked at a standard rate of 8 per hour. The direct labor efficiency variance is 8,800 adverse. How many standard hours were produced? Very simple. We will go with an actual method or we will go with the trick. Very simple. You will get 13,600. You will get 8 per hour and 8,800 adverse value is there. Okay. Then you will take an option. What is the option you will take? First you will take 12,000. 13,600 subtract 12,000. What you will get? 1,600. From 1,600 multiply by 8. You need to get the value of 8,800. Into 8. You will get 12,800. So it should not be your answer. Then you will go with 12,500. What is the remaining hours? It will be somewhere around 1,100 into 8 will become 8,800. This is a one way. What is an actual? That is nothing but they have given an adverse variance. Efficiency, labor efficiency variance is equal to, you need to take the standard rate into multiply by standard hours minus actual hours. They have given an actual hours. So the labor efficiency is 800% adverse is equal to standard rate 8 into standard hours The standard hours only you need to find it, right? Yes. Then actual hours that is 13,600. So if you solve this, you will get an answer of standard hours of 12,500. Okay. Next, difference between standard cost and an actual cost is nothing but your variance. I will set a standard. We can set a standard is known as predetermined value, predetermined standard, predetermined rate. So it is a variance. Then which of the following is not a feature of, that's a point, not a feature of job costing. Each job maintains its separate identity throughout the production stage. The job is meant for mass market. Yes, job costing is not a means for mass market. Okay. Production pattern is not a repetitive and continuous. Production begins only after gets from the customer. Production will get only from the customer. That's what job costing. Production pattern is not repetitive and continuous. Correct. From job to job, it will differ. Each job maintains its separate identity throughout the production stage. All this remaining three are correct. So the wrong is the job is meant for mass market. The cost of sales is equal to cost of production plus selling and distribution overhead. So the answer is option A. Then 33. The charging to a cost center those overheads that result solely for the existence of cost center is known as cost allocation. Mark this as an important question. You may get a question on this. You will need to practice on apportionment, absorption and allotment. These three cover it in your module. Then 34. PV ratio will increase if, let's say, I will take my standard 1 lakh, or I will take very simpler 10 rupees and 6 rupees is my variable cost. This is my sales and contribution is 4. So for PV ratio, it is 4 by 10 is equal to 40%. I need to increase. Selling price remains the same. Okay, I need contribution. What I will do here, my variable cost, I am going to reduce it by 5. Then it will become 5. 5 by 10 into 100 will become 50%. Then PV ratio got increased. So if there is a decrease in the variable cost per unit, your PV ratio will increase. Then 35. The following is not treated as a manufacturing overhead. The manufacturing not treated. Okay, read that point. Lubricants is a manufacturing overhead, factory overhead. Cotton waste is a factory overhead. Apportionment of admin overheads is a manufacturing overhead. Then night shift allowances paid to a factory worker due to general work pressure is nothing but your employee cost, is nothing but your direct labor. Okay, next 36. Which of the following would not be used to estimate the standard direct material prices? Not to be used. That's a key point here. Not to be used as a standard direct material prices. The availability of bulk purchase will not be the answer. Purchase contract already agreed will not be the estimated direct material prices. We could not agree. Then the forecast movements of the prices in the market, we could not say that. The performance of the standard in the operation, based on that, we could not able to find out the standard material prices. In remaining three, we can. But they are asking not to be used. These three all to be used. But this one will not be used. Then 37. The main purpose of an accounting of a joint product and byproduct is simply to determine the cost and product of the each different product line. So very simple, if you are having a joint cost of 1 lakh, this joint cost has to be divided into 3 production A, B, C. To determine these 3 separate product line, we are going to use joint product and byproduct. So my answer is option C. A certain process needs to be a standard labor hours of 24 skilled hours, 30 unskilled hours labor at rupees 60 and rupees 40 respectively as the standard labor rate. Actually 20 to 25 labor hours were used at rupees 50 and 50 respectively. What is a labor mix? That's what the question is. They're very simple. What you need to do, this 24, this 30 is given. So this is what the standard is. Standard is nothing but by 24 by 30 is nothing but 4 by 5. Then what is an actual? Actual is also nothing but 20 by 25, same 4 by 5. As there is no differences between the standard and actual, so the labor mix variance is going to be 0. My answer is option C. This is an important question. You may expect this question. Then 39, important. 1200 units were introduced in a process. Fine. 1200 introduced is what? 1200. Which of this? They calculated normal loss is going to be 120. If the actual output is 900, just simply add, this is going to be 900 plus 120. 900 plus 120, this is 1200, right? This is going to be 1200. If you subtract the values from that, 900 plus 120 will become 1020. 1020 minus 1200 will become 180. This is going to be a abnormal loss. From this, I will derive one more question. Listen to this point. My introduction is 1200. Normal losses 120 is expected, but an actual output is somewhere around 1100. Okay, now it will become 1220. Here 1220. Here the 20 is nothing but your abnormal gain. This is another alternative. Okay, they may create a question on that. Is that Limited planning to sell 1 lakh units of a product A for 12 rupees per unit? Fixed cost is 2 lakh 80. What is the realization of profit? 2 lakh. Very simple. This is a statement, sales minus variable cost gives you contribution minus fixed cost give you profit. But what they are asking, variable cost they are asking. We need to arrive in this point. What we are going to do, we will add the value. Okay, what is a profit? 2 lakh. What is a fixed cost? 2 lakh 80. Now it will become how much? 4 lakh 80. Then 1 lakh units into 12 per unit will become 12 lakh. Then subtract from 12 lakh 4 lakh 80. If you subtract, you will get 7 lakh 20. That's your variable cost. Then question number 41 quickly we will do. A firm has a fixed expenses of 90,000. Fixed cost is 90,000. Fine. Fixed cost is 90,000. Sales is 3 lakh. Profit is 60,000. They are asking PV ratio. To find out PV ratio, we need a contribution. So for the contribution, we will add the reverse calculation. Profit plus fixed cost is equal to contribution. We will add, it will become 1 lakh 50. We don't need variable cost to find out PV ratio. So what we will do, it is nothing but 1 lakh 50 contribution upon sales. 1 lakh 50 by 3 lakh. 1 lakh 50 by 3 lakh into 100 will give you 50%. So option D is your answer. 42. At an economic order quantity EOQ, the following, what is the following is true? The ordering cost is minimum, the carrying cost is minimum. The ordering cost is equal to the carrying cost. That's what exactly is. Okay, when ordering cost is equal to carrying cost, that's a point of EOQ, optimum level of ordering the quantity. So option C is your answer. 43. A company has to pay rupees 1 per unit royalty to a designer of a product which is manufactured and sells. The royalty charge to be classified in which company's accounts? Always the royalty related to that production purpose comes under direct expense. Okay. 44. If the time saved is less than 50% of the standard time, then wages under row 1 and Halsey plan on comparison gives what they simply give. The time saved is less than 50% of the standard time. Let's say the standard time is 10 hours. On that 50% is what? 5 hours. Okay, this is what the 5 hours given. Time saved is less than the 50% of the standard time. Let's say the time saved is 2 hours. Okay, that's what the time saved. But the standard time is 50% is 5 hours. If it is less than that value, under row 1 I'll say premium plan, which comparison you will give? That's very simple. You will put this in the formula. You will get the answer. More wages to the workers under row 1 plan than Halsey plan. Because in Halsey plan, we will only cover Halsey half. It is nothing but 50% only we will consider. Under the row 1 plan, we will take a proportionate value. So the more wages to workers under the row 1 plan than the wholesale plan. 45. The costs which are ascertained after they have incurred. After once it is done, it will called as historical cost. Next best alternative is known as opportunity cost. That's the next best alternative for gone to opportunity. The one opportunity is you need to lose to get the another opportunity. That cost of opportunity you lose is known as an opportunity cost. Prime cost plus variable overhead is known as marginal cost. It's correct only. Prime cost plus variable overheads is known as marginal cost. What is the marginal cost? Very simple. At level of output, I'm having 100 units. For that 101 units, what is the cost I need to incur? That's what the marginal cost. Simple meaning is I am not going deep meaning of that marginal costing. Then 47. Which of the following methods issue of materials is priced at predetermined rate? I already mentioned predetermined rate is nothing but your standard rate, standard price, standard rate, whatever you can tell. So it is nothing but standard price method. Predetermined set standards. You will set standards yourself to not to distract from that actual what is happening. 48. For reducing the labor cost per unit, which of the following factors needs to be used? Low wage rate, long workers. The correct answer is higher input-output ratio. Very simple part. To labor higher input-output ratio. It is nothing but productivity. We will say it is what? Productivity. The labor should be more productive. What? They need to use less time to produce more output, so that the labor cost per unit will get decreased. Okay, so we call them as productivity. Okay, maximum possible productive capacity of a plant when no operating time is lost. When no operating time is lost is known as theoretical capacity. From this you may get one question. This covers under the overheads chapter. Go and read this chapter and have a better clarity on normal capacity, practical capacity and theoretical capacity. You may get the question. Then 50. In job costing, which one of the following documents is used to record the issue of direct materials to job? To job, GRN will not be used. That's a goods receipt note. PO, purchase order to purchase the goods. Purchase requisition note from the production department for the level of purchase. The material requisition note is the issue of direct materials to the job. So it is MRN note, MRN number. Okay, that's it with the first part of the video. We will surely meet up in the next session with better clarity. Just revise this 50 questions. We'll start with question number 51. When you attempt a reconciliation statement of profit as per financial accounts and the cost accounts, the following is done. Your starting point is profit as per FA. Your end point is cost accounts. What you need to do? Add under absorption of overhead in cost accounts if you start from the profits as per financial accounts. That's what the exact answer is, because it is under absorb in cost accounts. So if you start from that financial accounts, you need to add back. Then 52. The fixed variable cost classification has been special significance in the preparation. That is a behavior cost. Behavior-wise cost will be helpful in preparing our flexible budget. Okay. So the answer is flexible budget. In flexible budget only, we will write variable, we will write fixed, we will write semi-variable. Separate classifications will be provided. So it will be easier for us to find out the 60% output, 70% output, 80% output with the standard 50% output. Then 53. Which one of the following is related to calculation of labor turnover? In labor turnover, we will use replacement method, flux method, different methods are there. Then 54. Cost accounting standard cost 10 relates to. Cost 10 is related to direct expense. Previously, I think somehow I wrongly mentioned about the direct expense as cost 4. As it is a cost 4, it is not a computation part. Cost 10 is only a direct expense. So here another MCQs may be tested. Cost 8 is cost of utility. Cost 10 is direct expense. There is no for decision package. There is no cost accounting standard for production strategy. Question number 55. Which of the following statements are correct? A materials requisition note is used to record the issue of direct materials to specific. Just now we have seen it is MRN note to a job. A typical job cost will contain an actual cost of material, labor and production, and that non-production overheads are often added to a percentage of total cost. No, it is not added. The job costing method can be applied in costing batches. Yes, you can apply. So answer is 1 and 3. So option C is your answer. Then 56. Cost of the ideal time arising due to non-availability of a raw material will be charged to a costing P&L. It is an abnormal situation, so it will be cost of idle time will be charged to the costing P&L. Then question number 57. What entry will be passed while integrating the accounting system for the purchase of stores on credit? They are specifically asking stores on credit. For financial accounts, we will write purchases to creditors. In cost accounts, we will write stores ledger control or material ledger control to general ledger adjustment account. In integrated accounting or integrated system of accounting, we will write SLC to creditors. This SLC is maybe known as material ledger control account. They may also call this as material ledger control account. So the answer will be SLC to creditors, option C. Which of the following is not a potential benefit of using a budget? More motivational managers, it is a potential benefit. Enhanced coordination of form of activities, it is a professional benefit. They are asking not means they are asking what is false regarding the potential budget. So improved interdepartmental communication, surely there will be there. More accurate and external financial statements is the correct answer. Okay, it is a basic logical answer only. 59. Cost accounting standards 1 is nothing but your classification of cost. Then 60. Equivalent production refers to is nothing but equivalent production means converting of that work in progress into a completed units. That's what the process is. Terms of completed units. Correct one is in terms of completed units. Then 61. One of the major demerit of centralized purchase organization, automatic centralized purchase organization is it will increase the high initial cost. Without any manual intervention, it will automatically purchase the centralized purchase system. So one of the major demerit is high initial cost. Without having certain limit, the material can be ordered, the purchase order can be placed at a higher cost than what is an actual market demand, everything is. So it is a high initial cost. 62. Which of the following is closely matched with just-in-time? Just-in-time is also known as pullback approach. Okay, so this pullback approach will be used to by a production, act as a production strategy to after the order only. If you go for car manufacturing, no, a car, if you're going to order a car, okay, you are going to buy a car, they will say you need to wait 2 months. So what they will happen, let's say you're going to buy a Hyundai car. So what they will do, once you get the order, then only they will go for a production. That is what pullback approach, just in time. The answer is production strategy. 63. Cost of unit of hospital is patient per day. Depreciation is an example of fixed cost, that is period cost. Ideal time is time spent by workers off their work. Off time of their work is known as ideal time. Overtime is nothing but an actual hours being more than normal time. That's what the key point. It is not standard time, it is normal time. Kindly ensure. Okay. It may be helpful for you sum solving also. Which one of the following items is not included in preparation of cost sheet? They are asking which is not there in cost sheet. Carriage inward is there, purchase return is there, sales commission is there under selling and distribution overhead. Interest paid is a finance cost. Finance cost will not be come in cost sheet. So it is your answer. Operating cost. Operating cost is nothing but service cost. Operating is service. Operation is process. Okay, kindly in operating is known as service. Okay, hospital, same as transport, undertaking, everything, all of the above. The sales is 90,000, variable cost is 75% contribution. You know one thing, VCR plus PVR. What is this? Variable cost ratio plus profit volume ratio is equal to 100%. The variable cost ratio they are given 75. So here it should be 100. Then my PVR is going to be 25%. To find out contribution, sales into PVR is another formula for contribution. You know one thing, PVR is equal to contribution by sales. If I need a contribution, I simply cross multiply. So by applying in this formula, contribution is equal to sales into PVR. So 90,000 into
25%, you will get 22,500. This is a one way. Or alternatively, what you can do, take 90,000, calculate 75%, you will get the answer. Okay, calculate the answer, you will get that. This is a reverse calculation. This is an actual calculation. Whatever the number you will get, 90,000 on that 75% calculate, subtract the value, you will get 22,500. Then 71. That is a process of charging the cost units by means of rates is known as absorption. Cost units. If it is a process of charging cost units, it is an cost absorption. Dash is a document prepared by a storekeeper to initiate the process of purchase by a purchasing department. He will ask by preparing a PRN, that is purchase requisition number or purchase requisition note. Next is 72. Dash refers to the recording of details of work done and time spent by an employee of each job or process is time booking. Next 73. Dash is a capacity for which a plant is designed to operate. It does not give an allowances for waiting, delays or shutdown is known as maximum capacity utilization. You can find this in your overheads chapter. Then 74. The objective of Dash to bring uniformity and consistency in the principles and methods of determining the research and development cost with reasonable accuracy and presentations of the same is nothing but cost setting. It is just an heading, research and development cost. So cost 20 is royalty and technical know-how. Cost 17 is interest and finance charges. Cost 19 is a joint cost. You may ask a question on this. 75. Dash is a system of accounting whereby the cost and financial accounts are kept in same set of books is known as integrated accounting system. What is a non-integrated accounting system? Both are keeping as separate books. Dash is one of the basic costing method applicable to an organization where the goods result from a sequence of repetitive operation. Repetitive means one by one they are going to from process 1, process 2, process 8. That's what the repetitive thing is. So it is process costing. Then fixed cost is 50,000. PB ratio is 25%. What is break-even point in sales value? Suppose they are asking break-even in value. Formula will be FC divided by PB ratio. If they are asking units, then formula will be fixed cost divided by contribution per unit. So here they are asking value. Fixed cost is what? 50,000 divided by 25%. If you do it, it will become 2 lakh. Easier one. Question number 78. Interesting question, important question. Standard price of material per kg is rupees 30. Standard usage per unit is 6 kg. Actual usage is 200 units. You need to compute the value for 200 units. So it will be 200 into 6 kg. It will become 1200 kgs. Out of 1200 kgs is a standard input is needed, but the actual input is 1250 kg. So what you need to do, they are asking material cost variance. From 1200 you will multiply with the standard rate. This is an actual out input into actual rate you will do. If you multiply, you will get 36,000 over here. You will get 43,750. If you subtract over here, you will get 7,750 adverse. Next, 79. Dash is a budget which by recognizing a difference in the behavior between fixed variable cost in relation to fluctuations in output, that is 60%, 70% or 80%, variable factors designed to change appropriately with such fluctuation is known as flexible budget. Next, question number 80. At the economic order quantity, the following is to we already covered, that is the ordering cost is equal to the carrying cost. 81. When a direct worker is paid on monthly fixed salary basis, the following is to there is no ideal time loss. There is no ideal time cost. That's what the correct answer is. There is no ideal time cost. When they are paying on fixed basis, they are not paying on a daily basis. The following is an example of direct expense as per cost 10. So, option B, traveling expenses to the site to purchase that direct material or whatever the kind, that is known as a direct expense. Overtime charges paid to direct workers to complete the work before time is a direct labor. Catalog price of a finished goods is a final product of pricing fixation. You can easily avoid that. 83. Batch costing is applied effectively in the following situation. You may apply in pharmaceuticals, okay, mostly in job costing techniques and drug manufacturing. In that, paper manufacturing will not be done in batches. Drug manufacturing is your answer. Then in the context of contract account, work completed and not yet certified, that is work uncertified. Okay, work uncertified should be valued at cost under WIP, work in progress account. 85, interesting one, important one, numerical problem. There is a loss as per financial accounts 10,600. Donations are not shown in the cost account 600. Donation here in the sense it is a part of expenditure. Okay, donation previously it was subtracted. Now you need to go for cost accounts. Previously it was subtracted, you need to add back as it is an expense. So 10,600 plus 600, 6,000 if you add, you will get loss of minus 4,600. So loss 4,600. Next, warehouse expense is an example of warehouse is a thing which will keep our goods for selling. So it comes under selling and distribution overheads. Okay, if I want to tell goods for selling, that goods for selling needs to be distributed to that person. For the distribution purpose, we need to sell the goods. For that purpose, we are keeping in warehouse. That part of cost will comes under warehouse expense. Selling will come as an advertisement charges. Okay, delivery charges will come under distribution overhead. You may expect another question which was there in cost accounting standards also. In reconciliation system, in reconciliation statement, expenses shown only in cost accounts are deducted from financial profit because it is only related to cost account. So that particular expense needs to be deducted as it is an expense from the thing. So from cost accounts, if you are going for a financial profit, you need to deduct it. In a job cost system, the costs are accumulated for the specific job. For every job, the cost, job cost should be calculated. 89. In a process of 6,000 units introduced by a period 5,000 units, the input of normal loss, closing work in progress is 60 per complete is 800 units. 4,900 completed units are transferred to next process. Equivalent production for the period. This was already done. Take 4,900, calculate 800 into 60 percentage. You will get 6 8s are 480. You will get 480. If you add, you will get 5380 units. That's what the equivalent production completed units. Equivalent production is nothing but completed units. Next, which one of the following is best described of fixed cost? It may change in total where such change is unrelated to the changes in production. It will not affect that production purpose. Okay. Joint cost is suitable for oil industry. In that only, we with a certain level of input, we will divide it into crude oil, natural gas, everything in a step-by-step process will be over there. So it is an oil industry. The standard deals with cost of service cost center. Service cost is nothing but cost 13. So cost 9 is what? Packing material cost. Cost 16 is what? Depreciation and amortization. 16 depreciation and amortization. Cost 22 manufacturing cost. Cost 9 packing material cost. Okay, remember like this. P9 is nothing but packing material cost. D16 depreciation, or like you are writing your exams after your direct taxation exam. Direct taxation exams is happen on 15. That foundation exam is happen some way. You will remember this. Okay, I don't want to confuse you. Cost 9 packing material cost. D16 depreciation and amortization. Cost 22 manufacturing cost. M22 manufacturing cost is cost 22. Then 93 in reconciliation statement, income shown only in financial accounts is very simple. Income is only shown. Okay, already it has shown an income. I derived a financial profit. Now I move on to costing profit. What I need to do? Income shown in financial accounts needs to be deducted to arrive at a costing profit. So it should be deducted. Then suppose what if it is an expenses? You may get a question. Expenses shown only in financial accounts. Already it is deducted. So you need to add back. Okay. The most suitable cost system where the products differs in type of material and work performed is known as job costing. Very simple process. One by one repetitive purpose batch for particular product will produce in batch for mass production. Job costing is a repetitive process of a type of material and that work performed is completely different from job. A may be a one person, they may give a separate job. B may be a one person, they may give a separate job. Let's say building construction. There is a building construction called A Construction Limited. So for A Construction Limited, they may get a 5 to 6 different jobs. They need to compute cost for each and 5 to 6 different jobs separately. 95. In a process of 10,000 units is already done. Repetitively, they are asking 7,500 plus 1500 into 70%. 1500 into 70% is nothing but 1050, I think so. If you add, it will become 8550. Option C. 96. The sales and profit of the firm for 2016 were 1,50,000 and 20,000. For the year 2017 was 1,70,000 and 2,25,000. What is the PV ratio? When they are asking multi-year, so what you need to do? Difference in profits divided by difference in sales. So what is the difference in profits? 25,000 minus 20,000 divided by 1,70,000 minus 1,50,000. It will become 50,000 divided by 20,000. So into 100, it is nothing but 25%. Option C. Standard quantity of material for 1 unit of output is 10 kg at rupees 8. Okay, 10 kg into rupees 8. Actual output during a given period was 600 units. This 600 units into 10 kg is nothing but 6,000 is a standard quantity. The standard quantity of material, very simple, for an actual output is 6,000 kg. Then, which one of the following is a long-term budget? What is a long-term budget? Capital budget is a long-term budget. When it is based on the behavior, it is a flexible budget. When it's based on that sales budget or that the budget which we have seen, no, the question number 4, just a minute. Yeah, sales budget is a part of functional budget. So it is nothing but your functional budget part. Okay, production budget comes under functional budget. Remember this, don't confuse this. The main purpose of cost accounting is to provide the information for the management for the decision making and to make an optimum utilization of minimizing the cost to maximize the profit. That's what the different main purpose. But one of the major purposes to provide information to the management for decision making. Then, which one of the following is considered to be a normal loss of material? The normal loss of material is loss due to accident. It is an abnormal loss. Pilferage, it is due to nature of that product we are losing. So it is a normal loss. Loss due to breaking of bulk, that is abnormal loss. Loss due to careless handling of a material, it is our mistake. So it is an abnormal loss. Which can be controllable. Okay, controllable situation is known as abnormal loss. Which can be uncontrollable. You cannot stop it. Okay, that is known as normal loss. Let's say if you are an ice cream manufacturer, if you are transporting ice cream from one destination to another destination, you may take a serious efforts to freeze it. But due to uncertain situation of high heat weather, it may be melted. So that is a normal loss because an ice cream can be melted during a transferring process or during a heating process. So it is nothing but a normal loss. Then this with 100 questions we have done with the second part. We will meet you in the third part soon.
Yes, now we will start with question number 101 to 150. This 150 questions is going to be very crucial. 101 to 150 because I have explained you many numerical problems with different alternative formula to make you easy for understanding, and also the theory questions will be there. I have highlighted that point. We'll quickly do it and quickly cover that part. First one, in a reconciliation statement, expenses shown only in financial accounts are always added to that profit. Then, which one of the following is a service department? Refining is a production department. Machining department is a production department. Finishing department is a production department. Then, receiving department is only a service department. Then, 103. In a process of 4,000 units, equivalent production, they are asking, we know one thing. We'll first take the completed units. What is the completed units? What is the completed units? Completed units is 3,300. Plus, what you need to do? Add 60% of 500. What is 60% of 500? 5 6 are 30. So it is going to be 300. So 3,300 plus 300 will become 3,600 units. Then question number 104. Read that question very carefully. Product A generates a contribution to sales ratio is 40%. That is nothing but PV ratio is 40%. Fixed cost directly attributable to A amounts to 60,000. Sales revenue required to generate a profit of 15,000. So we will have a formula to find out the sales revenue to generate. It is nothing but new contribution divided by PV ratio. What is the new contribution? Fixed cost plus desired profit. What is the profit you need to achieve? That is, fixed cost is 60,000, remains going to be same irrespective level of production. Profit is 15,000. If you add, totally 75,000. What is the new contribution? 75,000. What is our PV ratio? 40%.
75,000 divided by 40%, you will get 1,87,500. Question number 105. Cash budget of ABC Limited 4 wants. 4 wants means they are going to face a danger nearly. Okay, as a short-term surplus, they are going to have a not having a sufficient cash to move further in future. Which of the following would be an appropriate action taken in such situation? Purchase of new set, definitely you should not do. Repay of long-term loans, definitely you should not do because it is a short-term surplus. Return of preliminary expenses, you should not do. Pay creditors early to obtain a cash discount. Next, during 250 labor hours were worked at a standard rate at rupees 7.5 per hour. Direct labor efficiency variance is 8.25 adverse. How many standard hours were produced? You will go with two methods. One is an actual formula method. You can refer it over the book. They are asking the standard hours. So we will go with an option checking. First one they are given. I will take option A. That is my standard hours. On that I will subtract my actual. It is going to be 160. 160 into 7.5. That is a standard rate. That is 1200 adverse. I want 825, so it is not my answer. Then 2450 is my standard. This is going to be my actual. Difference between the standard I will get and I will multiply by standard rate. I will get 825 adverse. From that you can easily find out the formula. What is the formula? Standard hours minus actual hours multiply by standard rate. Okay, multiply by standard rate. Next, PQR Limited is manufactured a single product which sells rupees 40 per unit. Fixed cost is rupees 60,000 per year. Contribution to sales ratio is 40,000. This is nothing but contribution to sales ratio is nothing but PV ratio. PQR Limited is a break-even point in units. They are asking break-even point in units. The formula is break-even point in units is nothing but fixed cost divided by PV ratio for fixed break-even point in value. Break-even point in units is fixed cost divided by contribution per unit. You would already know the fixed cost, that is 60,000. You need contribution per unit. For that purpose only, they have given 40 rupees is a selling price. This 40 rupees selling price, you can calculate 40% on 40 rupees. 40% on 40 rupees will give you 16 rupees as your contribution. If you divide by that value, you will get 3,750 units. Next, which one of the following is applicable for cost control? Cost control is a preventive function, okay, and it is it is related to the current period. It challenges that actual cost. It ends when the targets are achieved. So the correct answer is option D. These three are wrong. Instead of corrective, it should be preventive. Instead of future, it should be current. It shouldn't have standard cost. It should be an actual cost. Okay. Under integral accounts, issue of direct material is debited. Direct material is given. It should be go to work in progress. Okay, if it is indirect material, factory overheads. Indirect material, factory overheads. Direct material, work in progress. 110. Product X generates a contribution of 40%. Is nothing but PVR. Okay, this is nothing but PVR. Fixed cost directly attributable to 60,000 per month. The sales required to same. 60,000 plus 12 is 72,000. 72,000 divided by 40% will give you 1,80,000. That's a formula for new contribution. I may use a different method. You may have a different formula. Fixed cost plus desired profit divided by PV ratio. You may have a different formula. I may have a different formula. This is what I will approach easily. Okay. Next, 111. Another interesting one, important one. The question is, the sales amount of product Z was 1 lakh, variable cost is 40,000 and fixed cost is 50,000. What is break even sale? Many of them, what you will do, just forgot about this part. What you will do, first you will find sales, then subtract the variable cost, then you will find the contribution. From that contribution, you will reduce fixed cost and then you will arrive at a profit. What is the break even point formula? Break even point is fixed cost divided by contribution into 100. What is the fixed cost? Fixed cost is nothing but you have 60,000. Sorry, fixed cost is 50,000. Then what is your contribution? Contribution here you need to put in denominator. You need to put the PV ratio. Okay, and then you need to find out the PV ratio. What is the PV ratio? Contribution upon sales into 100. That is 60%. So 50,000 divided by 60%. Then only you will get the answer. Instead, what you can do? Okay. You will go with the formula. What formula you can go? That's what my point is. The formula is fixed cost divided by contribution into sales. fixed cost divided by contribution into sales, it is nothing but, okay, very simple, that PV ratio only. We are just simply, we are not going into this step part. Directly what they will go, whenever break-even sales is there, they are given sales amount, they will give variable cost, they will give fixed cost. While studying variable cost, we will easily find out some sales minus variable cost is your contribution. Once you find out orally, you will take a calculator, fixed cost 50,000 divided by contribution 60,000 into sales, that is 1 lakh. If you do, you will get 8,83,333. Which of the following does not forms part of the prime cost? Prime cost does not form as overtime premium paid to workers, does not forms part of the labor cost. That is your prime cost. Selling an S&Co, which is using batch costing, provides the following information. What is the information they are following? They on the basis of the book, you are asking EBQ. EBQ is nothing but root of 2AB or 2AO by C. 2AB if you want to put, you can put it 2AB. The root of 2 into 4,800. This 50 is your manufacturing, that is your setup cost. 2 AS if you want to put, you can put it 2 AS also. AS divided by carrying cost per unit is given in 12%. You should calculate 100 into 12%. That is rupees 12. That should be put it over here. If you solve, you will get 40,000 as a value. If you take a root, you will get a 200 units. Then question number 104. In the method of appropriating joint cost on the basis of output of each joint product at a split off point. If it is at a split off point, we will use physical unit method. 115, interesting question. We have already done it. If you want, you can try it. The question is 9,900 completed units you will take, plus work in progress is 60% of 1,500. 1,500 into 60% will give you 900. If you add 10,800 is the equivalent units, that is your completed units. 116, interesting question from labor chapter, that is time employee chapter. Time allowed for a job is 80 hours. The workers take 68 hours to complete the job. Time rate per hour is 15. Total earnings of the workers under the row 1 plan is they are asking. So they are asking total earnings. That's what the crucial point is. Total earnings. Total earnings, you should add the actual plus with premium. Okay, the wages is 68 hours he is working, he is getting to be paid as 50. So total it is 1,020. What is row 1's bonus plan or row 1's premium plan? That is TT by TA into TS. What is TT? TT is time taken. TA is time allowed. TS is time saved. The time saved formula is equal to time allowed minus time taken. This was the formula. What is the time allowed? 80 minus 68 is the time taken. You will get 12 over here. Then time taken divided by time allowed into time saved. Time taken is 68, time allowed is 80 into 12. You will get 10.2 and then multiply by rupees 15. You will get 153. If you add this 2, you will get 173. Then 17th question, we will see it later. Okay, we will see this. We will keep this part pending and we will see this later. Next, we'll move on to question number 180. Which one of the following is a cost accounting standard deals with determination of equalized cost of transportation? Always remember, equalized cost of transportation will in cost 5. Cost 6 is for material. Okay, cost 6 is for material. Cost 9 is for packing material. Keep it as a revision. Okay, keep this part as a revision. Then cost 7, if I want to add, that is your employee cost. Okay, then what is cost 16? Cost accounting standard 16 we have already done. Just remember it. Cost of 16 is nothing but your favorite, depreciation and amortization. Keep on remembering. 16 is depreciation and amortization. 9 is packing and material cost. 6 is material cost. Packing material cost is 9. Material cost is 6. 5 is equalized cost of transportation. Average equalized cost of transportation. Cost 7 is employee cost. Then 119. What they have given in each of the following characteristics of the contract costing. What is a contract? It is not homogeneous. It is different from product to product, from contract to contract. Customer driven production. Yes, it is customer driven production. Short time scale for commencement to completion to the no, it should not be. It's a long term process. Differ from contract to contract. So 2 is only a correct option. 120. State which of the following is an example of byproduct. Interesting question, controversial question. Gas and tar in coke ovens is a byproduct, because by gas and tar we will get coke oven. By producing gas and tar, we will easily get a byproduct. Then molasses from the sugar industry. Okay, edible oils and oil cakes. By extracting an oil, you will get an oil cakes. The third one, curd and butter. Curd and butter in a dairy is not a byproduct. It's a byproduct of that milk. Okay, curd is not a byproduct of that butter. Okay, so we will at the point of splitting of a curdling, we will curd and butter will have as well 2 different products. Then 121, Which one of the following are an actual cost of acquiring asset or producing goods and service? Actual cost of acquiring an asset is known as historical cost. Question number 122, interesting and important question. I have given with a different formula, different approach. Many of them what you will be thinking of. It will be ZOM earned a profit of 80,000 during the month at a profit during the month of August of the selling price and the marginal cost. Here the marginal cost is nothing but your variable cost. Okay. Of the product 10 and rupees 6 per unit respectively, what will be the amount of margin of safety? Here you can put different methods to explain the problem. But here I will give you simple thing. Margin MOS is equal to sales minus break-even sales, you know. That's a basic formula. But there is an alternative formula. Whenever margin of safety comes, the numerator should be your profit divided by PVR. Both is given easily. Profit they have given 80,000. How I can find the PVR? Very simple. My sales is 10. My variable cost is 6. Then 4 rupees is going to be my contribution. So 4 rupees on 10 is nothing but 40%. Simply orally I can solve. 10 minus 6 is 4. 4 by 10 is 40%. So 80,000 divided by 40% will give you 2 lakh. Very simple. We are not focusing on this formula. Here the formula is P divided by PVR. Next one. In a process of 5,000 units are introduced the same question. 4,125 is a completed units plus 625 on 60% you will compute. You will get 375. If you add this, you will get 4,500. This is a repetitive question. Then question number 124. Which one of the following cost accounting standards deals with principles of determining joint cost? Interesting one. Try to confusing you by giving different things as a joint cost. While joint cost is cost 19. While cost 4 is what? Just now we have done with the cost 5 part, right? Cost 4 is nothing but cost of production for captive consumption. Cost 8 is nothing but cost of utilities. You may ask a test question on cost 8, cost of utilities. Cost 15 is nothing but selling and distribution overheads. 125, again repetitive part, you can practice it. Okay. Which one of the following does not account for increasing labor productivity? Does not account for increasing labor productivity, not. It is high labor turnover. Question number 127. Which of the following standards deals with principles and methods of determining manufacturing cost of accessible goods? Manufacturing cost of accessible goods is cost 22. Then what is cost 5? Just now we have completed, no? Average equalized cost of transportation. Cost 12, repairs and maintenance cost. 15, just now we completed selling and distribution overheads. Keep it cost as an provision. 128. Under non-integrated system of accounting, the accounts made to complete for the purpose of double entry system alone, we will prepare cost ledger control or general ledger control. So these two things, here they given general ledger control. Most of the expenses are direct in contract costing because it is related to that particular contract. So mostly it will be direct thing. 130. Under net realizable value method of an apportioning of a joint cost to the joint product, the selling and distribution cost should deducted from the sales value to arrive at the NRV, net realizable value method, to apportionment of the joint cost. Then 131, the answer key which I have provided is wrong. In a process of 2,000 units are transferred during the period, 5 units is a normal loss. Closing progress is 60% of 250. So 60% of 250 is nothing but how much? Completed units 1,650. 1,650, 25, 250 into 60% will give you 150. On that 150, if you add that part, you will become 1,800. The answer is 1,800 units. Option D, kindly change it. Question number 132. The PV ratio of ABC Limited is 40%. The fixed cost is 32,000. Variable cost is 6 per unit. Break-even point they are asking. Here they even ask the break-even point. Here you need to conclude whether everything is based on per unit or is everything is based on value. If it is based on value, break-even point you should find it in sales value. If everything given question is based on per unit, you will go with break-even point in units. That's a tip I want to provide. Okay, break-even sales is there. What is a break-even sales formula? Fixed cost divided by PV ratio. Okay, fixed cost divided by PV ratio. Okay, that's what that thing is. Okay, what you can do, fixed cost you will have 32,000 divided by 40%. Very simple. 32,000 divided by 40%. If you put, I hope you will get 80,000. Take a calculator. 32,000 divided by 40%. Yes, you will getting 80,000. Then B limited is a oil related we have done. Royalty designer to the product which manufactures. Any royalty which is related to that material or related to that production is known as a direct expense as per cost accounting standard 10. Next, the sum of direct labor and factory overhead is termed as conversion cost. I already told no, from raw material, the process from extract raw material till FG, that is your cost of production. In between, whatever the cost you will do, that cost is known as conversion cost. Directors' remuneration and expenses are forms part of admin overheads. Kindly mark it, admin overheads. For the purpose of cost sheet preparation, costs are classified based on functions. For the purpose of cost sheet preparation, the costs are basically divided into functional part. Prime cost, factory overheads, cost of sales, cost of production. Then which of the following items should be added to a costing profit to arrive at a financial profit? From costing profit, what are the things I need to add to arrive at a financial profit? Because income tax paid, it is a financial item. Okay, interest paid on bonds, it is a financial item. Over absorption of work hours related to costing item. So from the costing profit, I will add to arrive at a fixed financial profit. 138. Which one of the following statement is true? Which one of the following statement is true? Okay, true they are asking. Batch costing is a variant of job costing. Job costing may be used to estimating the profit of the particular job itself. Correct. Next, job costing cannot use in the conjunction with marginal costing. No, you cannot use it. Then in cost plus contract, the contractor runs a risk of incurring loss. No, they are not incurring any losses over there. Which one of the following is an example of byproduct? Curd and butter is not a byproduct. Mustard seeds and mustard. If you put the mustard seeds, mustard oil is a product. Okay. Next, edible oil. You will put at the time of making edible oil, you will get the oil cakes. That is your the wastages which you get. Now that you can easily sell it through other persons. Next, diesel and petrol in an oil refinery is a processing thing. Next, 140, interesting one, important one. I want to keep the time very shorter so that I'm just going very quickly. If you want, you can just pause the video and analyze it and then move forward. 140, the standard price of a material of rupees 20. Standard price SP is given. Okay, standard usage per unit is 5 kg. For 1 unit of output, you need 5 kg. Actual usage is 100 units is 520 kg. To produce 100 units, they use 520 kg. So what you need to do to purchase, what is the material usage variance they are asking. To find out material usage variance, we'll do first standard quantity. We need one product is 5 kg. For that 100 units, total standard quantity needed is 500 kg, but actual quantity consumed is 520 kg. They are asking material usage variance. Material usage variance is also known as material quantity variance. Material quantity variance is nothing but standard quantity minus actual quantity into standard rate. Okay, so upper standard quantity is 500 minus actual quantity is 520. Here itself 20 kg is an adverse into standard rate is 20. So it became 400 adverse. Option A is your answer. Then here I want to give you one more tip on that part. Here the point is, whenever you come across with quantity or a usage, you will use standard rate as a multiplicating factor. Difference between quantity means standard quantity minus actual quantity into standard rate. If you come across rate, it is standard rate minus standard price minus actual price into actual quantity. Because who is responsible, that you can easily remember in your study material. I don't want to go deep into that part. Which one of the following factors are responsible for change in the break-even point? For break-even point change in fixed cost will affect, change in variable cost will affect, change in selling price will affect. Because break-even point formula is what? Break-even divided by contribution, or break-even point divided by break-even fixed cost. The formula is equal to fixed cost divided by contribution, or fixed cost divided by PV ratio. So to find out PV ratio, I need selling price, variable cost, then fixed cost. So it is affecting by all. So it is all of the above. Then 142. Cost which relates to an item where the input has an explicit physical relationship with the output is known as engineering cost. It is from types of cost or classification of cost. It is from your first unit, introduction to first module, introduction. Read that types of cost. You may get one more question on that part. Difference between sunk cost, opportunity cost, relevant cost, irrelevant cost, imputed cost, engineering cost, managed cost, opportunity cost. These are the different areas of the cost is there. So study that. I will go 7 more questions for that part 3. 143. For producing CMO products, the following expenditures is royalty paid on sales, design charges of the product, hiring charges of product. What is direct expenses as per cost 10? You need to add all this thing. This all comes under cost 10. So 35 plus 8 is 43. 43 plus 3 is 46. So the answer is 46,000. Which one of the following is usually classified as discretionary fixed cost? The discretionary fixed cost is the research and the developmental cost. 145. Which one of the following cost accounting standards deals with the principles and methods of determining material cost? That's what we have really revised. Material is 6, employee is 7. So cost 10 is nothing but direct expense. Cost 14 is nothing but pollution control. Cost 15 is nothing but selling and distribution overheads. Okay. Then question number 146. Few more to go. Beta Limited has a profit of 2 lakh during the year of the process as per the costing records. If the interest on investments and income tax paid were 15,000 and 90,000, what is the profit as per financial records? In financial profit, what we will do? We will subtract income tax. Okay, we will subtract the income tax and we will add the investment. The same thing we are going to do. Add that interest on investments. Okay, subtract that 90,000. As it is an income tax paid, you need to deduct to arrive at the financial profit. Okay, if you do, you will get 1,25,000 as the value. Okay, then 147. Cost plus contract is usually entered in those cases. Cost plus contract is entered in all the cases. Very simple. Whatever the work you will take, you will enter in cost plus contract. Next, 148. The break-even point of Comin Limited was 3,20,000. The fixed cost is 1,28,000 and the variable cost is 12. What is the PV ratio? That's what the question is. Very simple. Break-even point is equal to fixed cost divided by PV ratio. To find out PV ratio, there is another formula. Fixed cost divided by break-even point. Fixed cost divided by break-even point. Without this variable cost computation, you will do break-even point is 3,20,000. Fixed cost is 1,28,000. So 1,28,000 divided by 3,20,000 into 100 will give you 40%. Very simple. So without referring to this part, we have completed the answer. Once ever we will find out when there is a break-even point is there, whenever the fixed cost is given, when there is a requirement of PV ratio, what you will do? 1,28,000 divided by 3,20,000 into 100, you will get 40%. Then 149. In a factory of part, where is a standard costing? This question is important. Where a standard costing system was followed, 4,000 kgs of material at 15 per kg were consumed. Consumed is nothing but an actual, resulting with a material cost variance of 1,000 adverse. The standard material cost of actual production. They are asking standard cost. That's what the standard material cost for actual production. You know, marginal material cost variance is equal to standard cost minus actual cost. Material cost variance is negative. Standard cost is divided into, further we will bifurcate into standard quantity into standard price minus actual cost is equal to actual quantity into actual price. They are given actual quantity into actual price is equal to 4,000 into 15 kg. So 15 rupees, 4,000 kgs into 15. Then standard quantity into standard price. Then if you multiply, it will become 60,000. This is negative. If you go on the side, it will become positive. Already 1,000 is negative. So the answer is going to be 59,000. Option C. Then 150. Cost units used in the power sector. Power sector is kilowatt hour. So option D is your answer. With this 150 we have done. And we have left with one more question on that 150, 101 to 150 series that we will cover from 151 to 200. With this, another one more 50 questions. This 200 MCQ series is going to be done and you are going to score 30 out of 30 marks.
Now we'll start with 117 and then we will move on to 151 to 200 questions. In this they are given the information given below. Overhead incurred is given, recovered is given. There is some cost of sales, finished goods, work in progress is given. Supplementary overhead rate to recover the under absorbed overhead they are asking. Very simple. The difference between them is rupees 1 lakh. How this 1 lakh has arrived? That's what the percentage they are asking. It is rate is nothing but a percentage. So they are given 20, 25, 0.8, 0.8. For this we will go with trial and error method without any formula. We will easily find out. I need this 1 lakh from these three values. How I can get it? First option 0.2. If I put and then everything it should be 0.2. Okay. And then I need to add the value. If I get 1 lakh, that's my answer. If not, that is not my answer. So what I will do, as we have marked the option, I will just try to go with 0.8, 0.8, 0.8. 5 lakh into 0.8 will become 40,000. 4 lakh into 0.8 will become 32,000. 3 lakh 50 into 0.8 will become If I am not wrong, it will become 28,000. If you add everything, it will become 1 lakh. So supplementary overhead recovery rate is 0.08. Sorry, here it is 0.08, right? 0.08, 0.08, 0.08. Okay. Now we'll move on to question 151. So question number 151. Cost units of an automobile industry, you know, it is a numbers, NOS, number of vehicles. Then question number 152. Absolute 10 kilometer is an example of transport sector. We will use it as a composite unit. This is a combined unit. Then 153. Which one of the following is not an element of master budget? In master budget, we will not prepare production schedule. We will not prepare. Then 154. Audit fees paid to cost auditors, as we already see, it is an administration cost. 155. Which of the following is not an element of works overhead? Works overhead is also known as factory overhead, manufacturing overhead, production overhead. So sales manager salary comes under selling overhead. So option A itself is my answer. 156. From the cost control point of view, the standard most commonly used is expected standard. We will set some standards and then based on that we will be able to control the cost. That is known as expected standard. Then 157. Which methods of absorption of a factory overhead do you suggest in concern which produces only one uniform time of product? At one time they need to produce one product. What is the absorption of a factory overhead? You will say there is not direct labor rate, percentage of direct wages is not there, machinery rate. It is rate per unit of output, because they are also asking only one uniform time. So we will go with per unit of output. Question number 158 is an important question, interesting question, which you may not be come across till right now. Listen to this. A work measurement study was carried out in a firm for 10 hours. The information generated was units produced was 600, idle time was 15%, performance rating was 120%, and relaxation allowances was 10% of the standard time. What is the standard time for each unit of units time produced? So there is a formula for it. Understood this. Normal time is equal to observed time plus performance. Then standard time is equal to normal time. The standard time is equal to normal time plus different allowances. Observed time we need to compute. Ideal time we will get 15. Based on that we will find out the working time, that is 85%. Number of units they have given 800 units, 600 units. Based on that I will give you a complete in-depth analysis. Normal time, observed time into performance rating. That's the first formula. What is the standard time? Normal standard time is equal to normal time plus difference in allowances. What is the ideal time? 15%. Then what is the working time? Remaining 85% is the working time. What is an observed time formula? Observed time formula is nothing but, we have already seen in that point, what is an observed time? 10 hours we have done. Based on 1 hour it is 60 minutes. What is the working percentage? Working time is 85% is an efficiency. So I will get 510 minutes. Okay. Then what is number of units? 600. How you find the allowances? Allowances they have given. Okay. They have given as 10% of the standard time. That's what the crucial point in this question. Here the tricky point is this standard time part. In many questions they may ask you relaxation allowances 10% of the normal time. At the time you should multiply from the normal value. If they ask 10% of the standard time, it is somehow tricky point. Normal time is equal to 510 into performance rating, that is 612 minutes. What is the normal time per unit? That is 612 minutes divided by 600 units. For per unit I will get 1.02 minutes. They said 10% of the standard time is the relaxation allowances. I need to find out standard time. So it is a reverse calculation. What I will do? First, standard time is equal to normal time plus differences allowances. So I will take standard time as X because I don't know. Normal time is 1.02 minutes. 10% of X, that is a 10% of a standard time only they given as a relaxation allowance. That's what I am taking as a differential allowance. Then X 1.2, 0.1 X, 10% I can write it as 0.1. Then if I subtract, it will become 0.9x, 1.02. Then X will become 1.02 divided by 0.9. It will become 1.133 minutes. So So my answer is 1.133 minutes. I hope you have gained the concept knowledge. Then 159. The factory has produced and supply of 24,000 units a component annually to a customer. The carrying cost per unit to per component per month. Here the point is per month. Here they have given a annual value, so it should be multiplied by 12. That's the only tricky point. Production batch is given. The formula 2AB divided by SR, whatever, the 2AB divided by O or C. The formula is simple. If you don't even remember the formula, you can do root of 2 into 24 annual component divided by that setup cost. Okay, divided by setup cost 1800. 2 into 12. This 12 is nothing but months. If you calculate root of 36 lakh, it will give. If you take the root, you will get 187. Some decimal values are there. Approximately 1897 units per batch. Then quickly we will go with 160. When a raw material is accounted at a standard cost, variance due to normal reason will be treated as direct material. Then question number, profit volume ratio will increase with increase in fixed cost will remains constant, because profit volume ratio having a formula of contribution by sales into 100. So it will affect only the contribution, it will affect only the sales, it will not affect the fixed cost. Even though the fixed cost is going to increase, profit volume ratio, PV ratio, contribution to sales ratio remains constant. 162. In absorption costing, dash is added to the cost, dash cost is added to the inventory, fixed cost is added to the inventory. Then prime cost. What is the prime cost? Prime cost is nothing but prime cost, important cost, main cost. Main cost is also known as direct cost. All the direct costs will be treated as prime cost. All the indirect costs will be treated as overheads. 164. A company employs 3 drivers to deliver the goods to its customer. The salary paid to drivers. The drivers is known as distribution overhead. Okay, but they gave part of prime cost, no. Direct production expense, no. Production overhead, no. A selling and distribution overhead is right. Suppose in the next option they may try to confuse you. Prime, selling, distribution and production. Now it's only distribution overhead. Don't go with selling overhead. Okay. Next, 165. Which of the following classification is meant for distinction between direct cost and indirect cost? That is based on element. Direct or indirect, it is based on element. Then ticket counter in a metro station is an example of. In metro station, in ticket counter, we will collect money. Okay, we will collect money. So it is a revenue center. Okay, so these 4 are known as responsibility center. What is this responsibility center? They are responsible for certain, for revenue, for sales, revenue center is responsible. For expenses, cost center is responsible. For profit, combined effects of cost and revenue center. Investment center, along with profit, they will take care of the investment, return on capital. That's what a simple explanation about responsibility center and a quick explanation. Then 167. Absorption costing is also refers as historical costing, traditional costing, full costing, all of the above terms. Easy one. 168. Which one of the following is an example of functional classification? As I already told, functional classification is nothing but prime cost, factory overhead, cost of production, cost of sales. So it is factory overhead in a given option. Direct material, direct labor. These 3 are prime cost. This indirect material is a factory. This indirect material is a specific item. It is specific comes item under factory overhead. So we will, this is a functional classification of cost is nothing but factory overhead. Then which one of the following is considered as an accounting record? Accounting record is nothing but stores ledger. Bin card is a costing ledger. Bill of material is related to costing. So stores ledger is related to considered as an material. So it is considered as an accounting period purchase. Then direct material can be classified as variable cost. Okay, this is based on the behavior. So direct material, all the materials will be treated as a variable cost. In which of the following methods of pricing, cost lag is behind the current economic values? In today, I have that same inventory has been valued at 100, but in my books of accounts, if I follow FIFO, I may value that at the purchasing cost of a fixed FIFO method, that is rupees 60 or 80 as the case may be. So at the cost lag began the current economic conditions is first in first out price method. Then 172. Which of the following methods smooths out the effect of fluctuations when material prices fluctuate widely? At the time of economic fluctuations or effect of fluctuations in the material, we will use WAMB, that is weighted average method. Then labor turnover is measured as the number of workers replaced divided by average number of workers. So option A, direct option, the labor turnover formula. Then 174, if the time saved is less than 50 percentage of that standard time, then wages under row 1 and halsey prime comparison is already done. That is more wages to workers under row 1 and then halsey. Then 175, labor productivity is measured by comparing. Labor productivity comparing total output with total minus, yes, you can do. Added value for the product with total wage cost, you can do. Actual time and standard time, both also you can do. So my answer is all of the above. Labor productivity, keenly focus on this part. Then 176, direct expenses do not meet the test of materiality, can be dash part of overheads. It can be as a treated part of overheads. Refer to this question also. 177, examples of direct expenses. Royalty charged on production is an example of direct expenses. Rent is an overheads. Bonus to employee is an employee cost. None of this is not my answer. Then 178, find out from the following scientific and accurate method of factory overhead absorption is. Basically we will, the traditional method of approach is Michelin rate method. So we will go with that scientific and an accurate method. Then 179, the important question you may refer under cost 4, cost of productive for captive consumption. Next, maximum capacity and practical capacity. Normal capacity of a plant refers to difference between maximum minus practical, no. Maximum and actual, no. Practical capacity and estimated ideal time as revealed by the long term. You can refer cost 4. Then 180, which one of the following items is not excluded while preparing a cost sheet? Not excluded they are asking, which is included in cost sheet. That is property tax on factory building is included. Okay, not excluded is excluded. Means you need to include that in a cost sheet. Property tax on factory building. Okay, I'm just going increase my speed to complete the lecture. Lecture length should be very less. Already that 3/3 parts itself 1 hour 20 minutes is there. So I'm trying to figure it out. If you need more explanation, just pause the video, try to analyze it, and then make a view on it. This is a basic theory questions only. Wherever need explanation is required, I am doing it. Okay. Which one of the following are direct expense? Cost of special design is a direct expense. Hiring tools of a direct expense. Salesman wages comes under selling overhead. Rent, rates and taxes of insurance will come under factory overhead. So option 1 and 2. Option A is my answer. Under non-integrated accounting system, in very simple non-integrated accounting system, separate ledgers are maintained for cost and financial accounts. 183. In a reconciliation statement, closing stock is undervalued. In financial accounts, very simple. This is my sales is 100, closing stock is 50, 150. So my opening stock is 10, purchase is 120. Then I will get my gross profit is 20. This is my actual. But what has happened? Closing stock is undervalued. How 100 instead of 50 I have put 40. So it will become 140. Then 10, 20 remains constant. Then gross profit will remain 10. So from 20 gross profit, my gross profit got reduced. To getting into my financial profit, I need to add back. So option A is my answer. Then in reconciliation treatment, transfer to reserve is related to that financial profit. So it will be added to that financial profit. A company pays royalty to the state government, fine, on the basis of production. Any royalty paid basis on the production is known as direct expense. Next 186, salary paid to an office supervisor is an administration cost. Admin and office and admin overheads. 187, cost price is not fixed in case of cost plus contract. In remaining everything, the cost price is fixed. Next, in order to determine a cost of the products or service, different business firms follow different methods of costing. Okay. Cost of products and different business firms will follow different methods of costing based on the requirement of the business firm. Okay, here I am going somehow slow. In some of the question I may get wrong. So if there is if you come across with any wrong answer which I have marked, just comment below. We will give an explanation to it and we will give a clarification to it. 189. In case product produced or jobs undertaken or diverse system, the system of costing should be used under job costing. Very simple. Jobs are undertaken based on job costing. 190. Spoilage that occurs under inefficient operating condition and it is generally controllable is known as abnormal. Anything which is controlled within your control is known as abnormal. Inefficient operating condition. So they are asking spoilage. So it is abnormal spoilage. 191. 10 more to go. The type of process loss that should not be allowed to affect the cost of good units is called abnormal loss. Normal loss will be allowed to affect the cost of good units, but the cost of good units will not allowed. That process loss is known as abnormal loss. For abnormal loss only we will find out the rupee value. Okay, for normal loss we will not find any value. Okay, next. When sales and production in units are same, then the profits under marginal costing is equal to that of absorption costing. This is the oldest question from 2012 itself they are asking. 193. Budgets are shown in dash terms. It's shown in both quantitative as well as materialistic. So my option is option D, both B and C. 194. Materials becomes key factor. Key factor here in the sense it is a limiting factor. Okay. If quota restriction exists, if there is any restriction from the government, it becomes a key factor. So any restriction quota exists, the materials becomes the key factor. The entire budget organization is controlled and headed by a senior executive is known as budget controller. They may test you this question. 196. The basic differences between a fixed budget and a flexible budget is that the fixed budget is concerned with a single level of activity. For 80% of production, what is that budget? That is a fixed budget. For that particular level of activity, I need to produce 80,000 units. For that, what is the budget if I prepare? That is a fixed budget. While flexible budget is prepared for different level of output. Let's say at 60% capacity I will prepare, at 80% capacity I will prepare, at the time I will prepare with 100% capacity. So it will get fluctuated. At the time, fixed cost, variable cost, semi-variable cost will be useful. That is behavior wise. 197. 3 more to go, 4 more to go. You can easily crack this. 197. A flexible budget requires a careful study of fixed, semi-fixed, that is a semi-variable expense and variable expense. Semi-variable expense, fixed expense and variable expense. Then 198. The operations to produce a unit of a product L require 9 active hours. Budget ideal time was 10% of the total hours paid are to be incorporated to the standard time for all products. Very simple. They itself given budgeted ideal time is 10% of the product. So what I will do, I will assume 100 hours. For every 100 hours, ideal time is what? 10. It is an assumption. Don't ask why. It is an assumption. Okay. Ideal time is 10 hours. Then hours of work is what? 90 hours. What they say, this 10% of total hours paid is to be incorporated into the standard time for all. So they given 9 active hours. On that 9 active hours, I need to incorporate this. For 9 active hours, 100 divided by 90. For that 100, okay, 90 hours I am getting. For 9 hours, how I will get? So I need to get this value. So if I cross multiply and I will just a minute. Yeah. I don't want to try to confuse you. First, for 100 hours, I am going to spend 90 as my production. For 9 hours, it is how much? 90 by 10 if I want to cancel. If I get cancel, it will become 10, it will become 1. So 100, it is 10 hours. Into rupees 4, it will become rupees 40. So my answer is rupees 40. The standard labor cost of 1 unit of product of L is rupees 40. Important question. You may expect this question in your examination. 199. Okay, the responsibility accounting is a system of accounting that recognizes various dash throughout the organization. Responsibility accounting, responsibility centers throughout the organization. That is a system. As I already speak with responsibility center, tell with me, first one is cost center, next one is profit center, next one is revenue center, next one is investment center. So these are the 4 responsibility center. They may test you in R1 out also. That is a system of reporting revenue and cost information to the individual responsible for the revenue causing and or cost incurring function. That is known as responsibility accounting. Cost revenue causing, cost incurring, individual responsible is known as responsibility accounting responsibility center. Thank you. With this, we are completely done with the concepts. I hope you have gained the some of knowledge. Stay tuned for more updates. Thank you.